Okay, so today, Jerome Powell, the head of the Federal Reserve, spoke. And in this video, we're going to talk about what you need to know. Okay, so let's talk about it. Okay, so today, Jerome Powell gave a much anticipated talk. He gave a little speech and then he gave an interview. Now, he spouted an awful lot of doublespeak, and you got to learn how to read between the lines. And I'm going to save you a lot of trouble by translating what he said into English and tell you what this means for you. This is going to be a very important video because it does affect you. Okay, so I'm not going to go over the whole speech, okay? I'm going to respect your time, and we're just going to kind of summarize the important points for you. Okay, so let's listen to a couple of sound bites.
As you talk to CEOs, people in business, what are you hearing about the cost of capital? Because these bond prices are really affecting cost of capital for the first time in a while. There was a long time the cost of capital felt like it was almost zero. And business changes an awful lot when the price of money goes up.
I talked to several people this week who run companies, and they each said that the economy remains strong.
Okay, so you would think that's good news, right? Actually, it's bad news. The Federal Reserve does not want a strong economy because their mandate is to fight inflation. Their mandate is to slow the economy down. They literally want you poor. That's what the whole process of raising interest rates is all about, is to slow economic growth. So the process of raising interest rates, by definition, is to make your life more expensive. It's to try to get you to stop spending money. It's try to get business to stop expanding. So the stated goal of the Federal Reserve is to get inflation down to 2%, which I don't think they're going to be able to do. But that is their mission. And in order to reduce inflation that much, they've got to keep raising interest rates. They have to make your standard of living much more expensive.
And that they don't see the consumer areas where spending is softening, but overall, I mean, look at the retail sales number. Consumer is strong. Volume's not going up very much, but companies are profitable. You don't, now if you get to where I think the cost of capital would really matter would be for smaller companies.
Bingo! That's exactly right. The companies that are going to be hurt the most are the small to medium-sized companies, the moms and pops. You guys are going to suffer the most. The large companies, they can absorb it. Mark my words. One of the goals of the Federal Reserve is to put as many commercial banks out of business. As far as they're concerned, there are too many banks. They will never say that publicly, but that is what they want to do. They want to get the financial system down to the top 5 or 6 or 7 banks. That's it. All the rest of the banks out there, they want to put out of business. And this process of raising rates is going to make a lot of banks go bust. That's why the number one point in my mantra is to reduce your exposure to your bank. Get your money out of your bank because there are going to be a lot more bank failures. Remember, as interest rates go up, the value of bonds go down. And what is the largest asset that banks keep on their books? You got it. U.S. Treasury bills. And banks do their lending based on the assets they have on their books. Well, if the value of the assets is going down, the less money they can loan out. And that's how they make money, right? They make money off of your money.
So we don't have a lot of tools. We have interest rates, and they're far from perfect. It's famously a blunt tool, but it's what we have to get inflation down. And really the world counts on us to deliver low and stable inflation.
Okay, so this is how they spin this, right? The world is counting on him. So I have to keep raising rates in order to save the world. What a guy. So never mind that your cost of living is going through the roof. He has a much bigger and a much more noble mission than helping you out.
That's what we have to do. And at a time like this, we know that we're having negative effects on, we had the home builders in this week. It's a very tough time in the whole home building industry. And we know that. But ultimately, what we want to get back to is a long period of price stability. That's the best thing we can provide. And that policymakers and businesses and everyone and people can just lead their lives not worrying about inflation. This is what we can deliver. It's what we have to deliver.
Okay, you heard them. The home builders are struggling. The entire real estate market is going to be a nightmare pretty soon. So in my opinion, we are just starting what we would call a moment in time. And history will reflect back, and it will not be a very pleasant moment. But that doesn't mean you have to be a victim in this. Learn how to take advantage of this. Reduce your exposure to your bank. Put a bunch of your money into gold and silver to preserve your buying power. and establish streams of passive recurring income. Within a few days here, Rob Bresson and I are going to reveal a program for you to help you with every one of those steps. Well, we can't help you with getting your money out of your bank. That's on you. Okay, only you can do that. But the other two, acquiring gold and silver and establishing streams of passive recurring income, we've got the solution for you. So make sure you stay tuned. If you haven't subscribed to the channel, please subscribe and hit that alert button. So if you don't mind, could you support my channel by hitting that like button? So Ed Anderson, live from Minnesota, asking you to subscribe and hit that like button, signing out.
Copy that.